Today's episode of the VentureForth podcast is sponsored by GUARDIUM token. GUARDIUM is a token for a new global public safety utility providing an economic framework for distributed emergency response to the 4 billion unbanked people worldwide with no 911. GUARDIUM token is now in public pre-sale. Get a 25% bonus if you act now. Go to guardium.co and sign up on the mailing list to get more info. That's guardium.co for global decentralized emergency response. Hello and welcome to the VentureForth podcast. I'm your host, Joe Mahavudivani. We'll be chatting with some of the most interesting founders, startups, and VCs about the experiences that led them to where they are today, what they're currently working on, as well as the journey ahead of them. Hello, VentureForth listeners. As we continue the crypto theme this week, we explore the venture side of the business with a partner of the world's most successful venture fund by a lot, Paul Veradittakit from Pantera Capital. At Pantera, he's a self-described Swiss Army knife, having a hand in a number of activities that have included closing over 30 venture investments, 20 token pre-sale investments, growing Pantera's brand, and building relationships with incubators, startups, and institutions to discover unexpected and valuable opportunities for everyone involved. Considering how fast the crypto industry moves, I can only imagine how much faster things move compared to the traditional venture capital that I'm used to. He's also the only other Thai guy that I've ever met who works in venture, and I can count on one hand the number I've met in the Bay Area tech industry. Paul, welcome to the show.
Thank you very much for having me, Joe. I'm excited to be here.
Awesome. Before we dive into crypto, I'd love to start by getting to know you and your background.
Yeah, sure. So my background is pretty diverse. I would say that, I don't have your typical, founding team background, or, I don't have, I guess for a later stage fund, I don't have an investment banking background, but the way that I got into ventures, just starting off, I grew up in Los Angeles. I went to UC Berkeley and really enjoyed my time there. Got me access to basically being in the Bay Area, and then right after that, I was thinking about going to law school. So I worked in a law firm for a year and a half, learning about the business and doing whatever I could to help out the real estate law team at Pillsbury Winthrop Shaw Pittman, one of the largest law firms out there. But I realized that I didn't want to be a lawyer, and I didn't want to go through law school and come out regretting it. So I wanted to get back into business. I graduated with a psychology and political science degree, so it was one of those things where I knew that I would have to figure out a way to get back in, and that would be just kind of starting from the bottom. So I worked at a litigation economic consulting group, basically economic consulting, working on a bunch of litigation cases for Fortune 500 companies, doing a lot of analysis. And then, that really got me working in teams. But I started getting sort of bored at the position. I wanted to do something more fast-paced, more innovative. And then I started doing some business development and growth for some early stage startups on the side, wanting to gain some experience. And then, right after that, I saw a position on LinkedIn for an analyst role at Key Capital, which is, rebranded as Strive Capital, where I could be an analyst looking at mobile apps to invest into. And I thought that was a great gig because I would be able to be early in a really disruptive space. I really felt like mobile first was going to be tremendous, and I was right about that. It was tremendous. It was a great experience, and then from there I was able to work my way up to an associate role, and then 2013 hit, and I started hearing about crypto from some of my friends at Lightspeed, and I started diving into it, thinking that I was going to actually start off on the operational side and then talk to companies like Coinbase. But, the opportunity presented itself at Pantera. I thought it was a great fit. I had the venture experience, wanted to dive deep into this space, really liked the team, the track record, and the brand, and really thought that I could, have a great fit and excel at this firm. And so far, doing, venture capital here and also doing ICOs here, it's been great, especially with the way the space has been moving.
So you've been sort of on the both sides of like traditional VC and VC in crypto. So what is your thoughts on the disruption of traditional VC and VC's role in startups now that founders can raise directly from individuals through an ICO?
Yeah, I think we started off in a world where it was completely disrupted, and it was disruptive in terms of, now entrepreneurs are able to kind of create a new cap table and to raise from an audience that is global. And this audience can participate in sort of any amount that they wish to. And it gives entrepreneurs a way to, on top of that, accelerate a network effect. So there are many benefits to fundraising using that strategy. And, we'll see what happens going forward in terms of, regulations and everything, but, that's completely disruptive. I think things are going to get a little bit more balanced. I mean, we're now seeing a decent amount of VCs able to invest into tokens and crypto. So, I think the disadvantages of raising capital this way is you don't get the traditional governance and traditional value add that you get from VCs that are structured to provide the funding and to be able to have enough skin in the game to really want to help and provide governance to these companies. But I think we're going to be shifting more towards the middle where VCs are getting in the game. Term sheets are going to be structured a little bit closer to what we're normally seeing in traditional venture capital. And we're going to start seeing sort of multiple rounds of funding, different valuations. But nevertheless, I mean, what this looks like in the future is that VCs are going to have to adapt, get in the game. There's going to be a lot more protection for VCs, and things are going to have a lot more sort of governance around deals. But you're still going to be able to get your product and get its value out to the public, and I think that's extremely powerful, especially for anything that is consumer related or marketplace related.
So I'd like to kind of dig into, Pantera, just because Pantera has sort of been in the news recently and is super, super interesting. It's been hyper successful. Before we dig into that, though, what is Pantera's sort of investment thesis and what are you looking for?
We have 4 different strategies, but, 2 that we're really focused on are basically venture capital. So we are investing into equity into blockchain, crypto-related companies. So far, the overarching theme for Pantera is what makes blockchain so disruptive? Well, blockchains enable peer-to-peer transactions and transfers of any sort of digital asset without intermediaries. So for the longest time, whether they are banks, whether they are monopolies or companies, there are entities in the middle that are taking fees, unnecessary fees on top of these transactions that don't necessarily need to be taken. And what the blockchain allows is the circumvention of those intermediaries and those regulations, and to be able to do things between parties in a directly peer-to-peer way, which saves both parties a lot of costs. And that's the overarching theme for Pantera. Now, we do that in 2 ways. We can invest into equity, into companies, or we can invest into tokens. Tokens can be pre-sales, which I think we've gotten a lot of attention for because of the help that we can bring to those projects at the earliest stage. But we can also invest into tokens that are already out on exchanges in the secondary market through our quant fund. And so, that's what we're looking for. Right now, we have funded a lot of quote-unquote infrastructure companies. So companies that are helping to facilitate the earliest use cases and the adoption of cryptocurrencies. And, we've also funded some applications, but down the line, I think, we're going to start getting higher and higher up in the stack in terms of the types of companies that we're funding.
You mentioned that you are Pantera is investing in a lot of sort of tokens and also pre-sales and that sort of thing. What lockups are you seeing in the market right now? And does Pantera traditionally sell sort of as soon as able in peak market conditions? Like what sort of terms are you looking for on those?
Yeah, just like how term sheets are going to evolve, lockups are part of that too. And investors are going to get better in terms of how they evaluate companies. Entrepreneurs are going to get better in terms of how they structure their sales. And one of the risks of doing a crowd sale is that if you don't structure it correctly, you could have the price of your token drop quite a bit, especially if people are selling right away for one reason or another. So a lockup is a way to keep investors with you and sort of give entrepreneurs a chance to start building product and showing evidence of success before liquidity hits the market. And we started off with seeing no lockups. Now we're seeing a balance there where there's a combination of no lockup to some lockups to even longer lockups. So I think it really depends on the specific type of project and the specific type of use case. But lockups can range anywhere from 0 to 4 years.
Interesting. Yeah, I recently read an article in the New York Times about Pantera's really just incredible success over the last couple of years, and specifically quoting a return of over 25,000%. And that's also when Bitcoin was, I guess, less valued. Because of the ever-changing price of tokens, how does the firm make decisions about when to cash out and return money to LPs? And how involved are LPs in those decisions, considering the speed at which the industry is moving?
Yeah, that's a great question. And, I think that was a question that you touched upon a little bit earlier too, where, Pantera, we are long-term investors, even though we're structured as a hedge fund. We are looking to these deals with a venture sort of mindset, knowing that the greatest returns are going to come from those companies that are building tremendous value over the long term and become building blocks for the entire ecosystem or for their entire use case. And so, we are not there to get in and get out right after the ICO. Now, of course, when there are times where, we are overweighted in a certain portfolio, then we have to sort of do traditional portfolio management and portfolio diversification and allocation. And, that is done within our team. We also have done a lot of analysis of, protocols in the past performances, looked at similar companies, looked at valuations and have modeled a bunch of things out regarding where each of these companies should be, valued over time. But nevertheless, a lot of it is really coming from knowing what our projects are doing, and that comes from just, being really deep with them and helping them out. The more that we help them out, the more that we know how each of them are doing. And from there, we can assess how we should sort of balance our risk in each of these companies. It doesn't make sense for us to go to our LPs because we're a lot deeper with the ecosystem and these companies than they are. So they are trusting us to be stewards of their capital.
Definitely. So, of course, one of our roles is to help portfolio companies be as successful as possible and help them grow and make the fund as valuable as possible for LPs. But how much of Pantera's success would you attribute to, I guess, the luck and the super rapid increase of the value of the holdings and the tokens? And how much to sort of that analysis and to the help and the skill and that sort of thing?
I would say that we have been very instrumental to the value creation of our companies. We obviously get into each of these companies at different stages in their life cycle, but everything from starting off and helping entrepreneurs brainstorm around how to properly convey and write their white paper to, what is the best token economics for their product, to how to best structure their token sale so that they get the right strategic investors involved, which helps with fundraising, which helps with partnerships, which helps with marketing, and then, helping to build the community, do a successful crowd sale. And then afterwards, as we are building a very large portfolio of diversified investments, there is a lot of cross collaboration and partnerships that can be done around there. And then, of course, with sort of the reach that we have, in terms of knowing some of the top talent in the industry, having spoken at the right conferences and having the right connections at universities, we can really help these companies hire and really build their companies and scale to the right level. So I would say it's a great combination of the entrepreneurs executing and finding those right ones. But, we feel that we can provide a lot of value to kind of get them to their goals at a much quicker pace.
Yeah, definitely. I've been following this thing for a little bit now, and in 2017, the FOMO was and the fervor was huge. And it even seems now in like 2018, there's a conference and events around blockchain every week, every day, even. How do you see ICOs differing in 2018 compared to 2017?
I think we're going to see, an evolution of term sheets and SAFs. I think it's going to get much closer to traditional VCs, and I think that is going to actually bring in more VCs into the game. I think we're also going to see, multiple rounds of fundraising, which I think is healthy for the ecosystem. Not having to raise all at once and over raise, I think that's going to be a nice shift also. And I think we're going to see more and more mainstream investors wanting to participate, and that'll open up room for more innovative products, that can, help facilitate that interest. That could be, interesting portals to find, discover, analyze ICOs, to participate, to syndicate, maybe even, going as far as, what the Chinese are doing and having mobile apps where you can just, you can, with a few clicks of a button, you can participate in an ICO right from your mobile phone through a mobile app. I mean, I think that part is going to change quite a bit too, in terms of making it easier to discover, find, analyze, and participate in ICOs and manage your portfolio. So I think this is going to shift more towards being more institutional friendly and also being more consumer friendly. And I think that's going to be great for the ecosystem.
Have you noticed the FOMO kind of growing or shrinking? FOMO being a fear of missing out for the audience.
This is growing to levels that I didn't even think it would get to by this time of the cycle. I mean, I was in Los Angeles, and my mom, was in the car with me, and she asked me, "Hey, are you putting money into stocks?" And I said, "Yeah, sure. The 401k, the usual." And she said, "Well, my friends are telling me about this new type of stock. It's like similar to fake money. Do you know anything about it?" And I was like, "Mom," because I know that she's super conservative. I was like, I don't know what you're talking about. And she's like, just kind of jokingly saying that. And then she said, "Well, someone mentioned that you might know something about it, but yeah, no, a lot of people are making money off of it. And is this something that I should be looking at?" I was like, okay, now we know that this is getting crazy when my old mom is asking me about crypto. Like this is getting to new heights for me, that's for sure.
That sounds a lot like my Thanksgiving and Christmas as well. Some of the guests were bringing crypto as like white elephant gifts, so that was a pretty interesting experience.
Yeah, no, that's what we all predicted. I mean, we predicted that it would be fun turkey dinner conversations. Lots of crypto gifts are going to be thrown around. And I actually think 2018, I think we're going to hit even newer levels.
So how is, I guess, the ecosystem being affected by, or maybe it hasn't quite happened yet, or there's too much FOMO around it, but by scam projects? For instance, I went to the Blockchain Expo, and I was kind of looking around and different projects and reading people's posters and that sort of thing. And many of them stuck out. One specifically said that they were the world's first decentralized blockchain-based community-driven marketplace ecosystem. I have no idea what that means, but apparently, like, their ICO is super successful. It's just a bunch of buzzwords. So, what do you think? What do you say to people who believe that ICOs are a scam?
We see a bunch of ICOs from all across the board, and a lot of them are scams, and a lot of them are ones that are doing it for the wrong reasons, or are not even having any use of a token or a blockchain. And yeah, I mean, there are a lot of scams out there. I would encourage people to do a lot of research and be wary of. That's actually one of the things that we look at as a potential concern or red flag when we go through projects, websites, and white papers is exaggerations, right? We're the first, we're the best, things that are so gimmicky, it just doesn't
if you're a good solid project, you don't have to use those words. You just demonstrate it itself. So that's actually one of the sort of red flags that we have as we're looking through projects. And for retail investors, I mean, you gotta dig deeper than that. You gotta, either do your research or talk to the right people in certain spaces or that you really respect and kind of dig under the hood to see if some of these are scams. Or, again, because there's such a big gap between those who are familiar with certain entrepreneurs doing certain projects or know about certain technologies, that it makes sense to, at this time, possibly invest into some sort of syndicate or some sort of fund if you want to get more than just exposure to the top 3 cryptocurrencies, because those people have the best chance of being able to make money. But I think the biggest thing in this space is to be able to not lose a lot of money when things go south.
Right. And we're starting to see some of the kind of novelty tokens like Doge, for instance, which I think recently crossed the $1 billion market cap, starting to gain a lot of traction. So it's really interesting to see. I mean, do those types of tokens inevitably crash?
Yeah, I think so. I mean, I think a lot of the tokens that, again, people just don't use or, aren't engaging with the community or, aren't focusing on building product and going out there and actually having real usage. I mean, these are all gonna crash, and there's gonna be, more consolidation into the ones that are actually, executing. And this happens when the market's not so frothy. I mean, right now, everything's up, right?
Yeah.
But, when it's not this environment, then that's when you'll see a lot of those just really crash.
So which projects and coins are you most excited about right now? And those can be ones that you've seen that Pantera may or may not have gotten involved with.
Yeah, I think there's so many great projects out there. I don't want to single any of them out, but I would say that, certain themes I think are extremely valuable for this ecosystem. We started to see a huge community develop in China, and then with the Chinese ban, it backed off. And then, Q4 of last year, we really saw the US take the lead in terms of ICOs and interesting projects because of, regulations not being so hampering, and the fact that a lot of VCs are pushing their portfolio companies to do ICOs, and then, Silicon Valley especially really got, interested in using this as a fundraising model. But I think going forward, I mean, now that the Chinese have figured out how to do ICOs and how to structure them, while still being based in China, and then, the exchanges getting back into the game, I think we're going to see a lot of interesting regional players building really good infrastructure to help support new decentralized applications. So I would think Quantum and Neo should be pretty interesting to watch this year in China, to Icon in Korea, to obviously Ethereum and some emerging new blockchains that are using different ways of mining and doing consensus and being able to enable more transactions per second. Things that are implementing better features of Bitcoin and Ethereum that are going to start gaining some ground. So I think, again, like each geography is going to be focused on implementing different parts of that infrastructure. And it's going to be interesting to kind of see those companies in each of those geographies, see if they can build a community and, new sets of decentralized applications that come out of it. And, some of the other, outside of just new blockchains, I think other sort of infrastructure companies that are going to be needed are going to be things like decentralized exchanges, decentralized stability coins, to other things in terms of scalability layers for blockchains. And then even moving up higher in the stack, we're going to start seeing companies targeting some of the largest rent-seeking companies out there, such as YouTube, Airbnb, Uber, Craigslist, all these different marketplaces. And we're even going to see new types of data marketplaces that aren't even being tackled right now because there isn't a way to, there isn't infrastructure right now to be able to support and incentivize people to contribute data and to have that data be encrypted in a way and verified in a way that hasn't been able to happen until there's now an incentive layer like tokens and blockchain infrastructure that can actually make that use case happen.
What is sort of the most immediate problem then? There's many different things and protocols that people are writing to solve all kinds of problems right now. Is there one that really stands out as being a huge problem in the industry right now?
Yeah, I think the number of transactions that you can do, for instance, the use case of ticketing on the blockchain. Well, if you're going to put transactions and that number of transactions on a blockchain, it's got to be able to scale to that level where you can support the level of transactions for any sort of ticket entry, for any sort of event. And that is tough right now on any blockchain. So I think for those sort of use cases, you're going to be able to, you're going to need a way to be able to do it on a blockchain or in some sort of side chain or something, and be able to do it, very securely, but also maintain the sort of benefits of a blockchain infrastructure. So I think that's probably one of the largest challenges right now is for use cases like that. There isn't anything that's scalable that's out in production right now that someone can use.
So actually on that note, we're seeing gas prices for Ethereum transactions go up. We're seeing, a lot of clogging up in Bitcoin Core transactions. Do you think either of those, I guess specifically pertaining to Bitcoin, do you think those tokens will be the market leaders by the end of the year? I think right now people will say that, last year there was a lot of attention with the Bitcoin price and, all the forks and all of that. And it's definitely warranted. Especially with futures, it really started getting Wall Street and finance professionals, into the space. I really think that this year is going to be the year of more decentralized applications. And right now, from what I see, especially after going to DevCon, there's just a lot of momentum for the Ethereum ecosystem. So I think it's really Ethereum's to lose, at least for this year, in terms of really pushing forward with the development of the protocol and the community and fostering that and getting a lot of dApps really out there and showcasing the platform. I think there'll be other blockchain platforms in other geographies that are going to start gaining some ground too, but I think it's really Ethereum's to lose because, again, momentum is on their side right now. Right. Are we still in the early days for crypto?
We're super early. I think we're in the half inning, first inning. I mean, this is just getting started. So, I'm glad to see this. I mean, myself and Pantera being, I personally have been at Pantera for almost 4 years now, and I've been in blockchain and crypto when it wasn't so sexy, and it's great to see it, emerging now. But I think you can talk about the killer use cases being sort of money movement, and I think that'll increase more, but definitely one of the killer use cases right now is fundraising. But until we actually see someone say a killer use case is some sort of application, we're just in the earliest of stages.
I recently interviewed Roger Ver, I guess otherwise known as Bitcoin Jesus, sort of a figurehead in the community. And he really believes that you really have control over how they spend their money and invest their money and everything as it pertains to that. And really government shouldn't be involved. What are your thoughts on that issue and what happens ultimately if a retail investor who isn't an accredited investor, and this is like sort of their livelihood, lose everything on a bad deal?
Yeah, I mean, that's what the SEC is trying to prevent and trying to protect consumers. I know that that's happened quite a bit or decently in other geographies, like maybe China. I heard that the percentage of scams over there is much, much higher, and there's maybe less diligence that's done on projects. I mean, I think at least in the United States, because we've been at the forefront of consumer investments or crowdfunding. I would think that, and we have the SEC around. I would think that there would be a lot earlier stages of transparency, governance, and self-policing that happens within our geography and within our industry, where we're starting to see it now. Especially with if this happened like 20. Actually, I mean, I don't think it would happen 20 years ago, but I mean, with with the internet now and with social media, you're starting to see projects get called out for being frauds, and people doing ICO reviews and people promoting best practices in terms of how to look at investments in this space. And I think that's going to increase more. And I'm just hopeful that that will balance out with the amount of companies and amount of projects that come out, and then the sort of marketing tactics and everything else that comes out with doing ICOs, that, with that balance out there and a lot of transparency and people being bold to call out projects and, helping to educate the ecosystem, that there will be at least less likelihood of people losing money here than there are in other geographies, with scams at least. Now, again, it's tough because, when you're doing venture investing, a high percentage of companies are going to fail. And that part, there's not as much you can do on that versus just trying to prevent a lot of scams from happening.
Right. So I guess a rule of thumb, don't take out a mortgage to, invest in sketchy ICOs.
Yeah, exactly. Yeah, only invest what you are able to lose. That's for sure.
Got it. So which coins have you passed on but wish you got into?
I think we're pretty fortunate to have gotten into a lot of the projects and a lot of the ICOs and blockchain companies that we wanted to get into. I mean, there's a few out there that, have been big names recently that have made pretty large returns, whether they are based in the US, based in China, based in different geographies. And, it's one of those things where we are going to look at every project with a technical lens. Joey is super technical and he's been, operational within the space. We're going to look at things from an institutional lens and a finance lens with Dan. And then for me, we're going to look at things that make sense on a business and venture and opportunity lens with myself. And, with that, it means that you're going to miss out on certain ones that do well, maybe because the tech isn't there, but nevertheless, they had really strong marketing and they built a great community and those sort of things. So, so for us, I mean, we missed out on some that have been big, but we think that with that right combination of me, Joey, and Dan bringing different perspectives to the table, that we're going to get into sort of the best, high, risk-adjusted returns off of, ICOs that we think kind of check all the boxes for us.
Considering how much these companies are raising, do you think that, they can raise on, great idea and great marketing and community, maybe less on the technical acumen side, but then considering if they're going to raise 10, 20, 50, 100, I think Telegram just announced or speculating that they'll be having a $500 million round. Do you think these companies can raise and then figure it out later?
They can. They're in terms of investing into companies, at the end of the day, it all comes down to the team, and no team is perfect. So if you have confidence in what they have so far and what they've built so far, if anything, and you know what their limitations are and what they need, but you are confident that based on what you've seen from them, based on what they've done in the past, that they can figure it out, then sometimes you make that bet. And for us, I mean, we like to look at white papers. We like to look at code. We like to look at any other evidence, product partnerships, anything that can, de-risk our investment and make us confident. But, sometimes a team bet is fine too, if it's just that right team where, they can give you that confidence that they'll be able to check all those boxes later on.
How does Pantera go about evaluating companies? I mean, I think the reason why I ask is because when I interviewed Mike Jones from Science, we were talking about how, let's say, on the venture side, let's say if you invest in a company at a $10 million valuation, sure, and they have an ICO, their token ecosystem suddenly is worth, let's say, $100 million. And then, after some pop, the ecosystem may be worth $500 million. What is that company now worth if ever they wanted to become acquired or something like that?
Yeah, I think in terms of, and this is all new territory for this ecosystem, especially if you've raised, if you do whether you have equity or whether it's just a token structure in your company, what happens when there is what is going to drive an acquisition and what is being acquired. Well, obviously, if you end up doing a token, you are open sourcing your code and infrastructure, and what you would possibly be acquiring is if there's additional IP that somehow is not tied to the open source that can be sort of warehoused within the equity component of the corporation itself. That could be interesting, as if there's an acquisition, then you would be purchasing the team, that IP, and whatever tokens that portion of that company held. So that could be something that could be acquired. Or if there is an equity component, maybe that's started off in the beginning, or maybe that equity component was created later on where it provided products and services on top of the underlying protocol, almost like a Red Hat or something like that, then that could also be having its own revenue model and could be acquired there. So now the big question is, how do we value that portion of it with the tokens and everything else? And especially with tokens, the valuation gets inflated. These are things that are going to be figured out, down the line right now. We've obviously seen a lot of, some companies that have achieved quite a bit of a market cap through issuing a token. And, once the first M&A deal falls, then I think we'll see a lot more, structure in terms of how these things may go about.
Definitely. Do you have any advice for somebody that wants to get into venture and or start a crypto company?
Yeah, I think with venture, it's all about understanding the space really well, and it's all about experience, and it's all about hustling. So if anybody wants to get into venture, I think they should basically dog food the ecosystem, especially in blockchain. I mean, if you're looking to invest and be an investor into ICOs, you should be personally investing into ICOs and testing out different products, really understanding the space really well, getting into different groups to chat about ideas, and then providing a lot of value to investors that and if they like working with you, that's one great way of getting into venture. In terms of an entrepreneur, I think it's great to go out and network with as many other entrepreneurs as possible. Go out to some of these bigger conferences, try to understand where the space is going, where the open fields are. And, I think one thing that we're going to see is we're going to start seeing more studios and more incubators for blockchain and crypto and ICOs. And, I think once you have an idea out there, it's great to validate it with people that are in that specific role or people within the industry, so that they can poke holes into it, let you know if it's something that's needed within the ecosystem, and then just go forward with it. But I think the best way to get started is to understand the space and to meet people and to bounce ideas off of it, and then to go beyond that and start actually creating some materials and getting that validated before going forward and building out a team and fundraising.
Interesting. So yeah, I guess more consensuses, more sciences, and that sort of thing.
Yeah, exactly. I mean, I think we're going to see a lot more of those type of companies, and more focused on crypto. So that's what I see going forward. We're going to need a lot more mentorship for companies. We're also going to need to see a lot more dev boot camps and other sort of organizations that can help facilitate the conversion of regular software engineers to crypto engineers, because those are deeply needed as we reached $5 billion raised using tokens. That capital needs talent to be able to bring those use cases forward.
As they say, a rising tide raises all boats.
Exactly. Totally.
So that leads us into the quickfire round that allows our listeners to get to learn a little bit more about you personally. So I'd like to start off this round with, what is your favorite book?
I would say one of my favorite books that I read not too long ago was called E-Boys. I was fascinated about, once I get into an industry that I really like, I want to learn from people that have been in the industry, and I love hearing about really great stories of the ups and downs. And E-Boys is a nice book about the guys at Pantera Capital, and really how that firm got started, how they kind of, operate, some of the things that they learned throughout their journey in the early days. And I thought it was pretty inspiring as someone that wants to always improve upon, what I do for a living. If I can learn from, one of the best firms out there, the legendary firms, and hear those stories, I thought that was pretty cool.
What do you collect, if anything, and why?
I trying to think if I really collect anything. I don't think I'm known to be a big collector of anything. I'd say that the closest thing that I would be to being a collector would be of sports apparel or sports items, just because outside of crypto, I'm a huge sports fan. So I'm from Los Angeles. I'll support the Dodgers, the Rams. Up here I like watching the Warriors play. So that helps me in my personal life. That helps me in my work too, because I get to relate to people that are also sports fans. So that's probably the closest thing that I do in terms of collecting.
So a follow-up sort of to that, but what's one thing that you spend too much money on that you don't regret?
Crypto. Yeah, I would say that some people say you shouldn't spend too much money in the space because you're already so knee deep in it. But I say, hey, I'm really passionate about the space. It helps me learn, and so I also invest quite a bit in crypto stuff, and because of that, I don't regret it.
What is the best Thai restaurant in San Francisco?
I like La Rose. There's one in the Tenderloin, and then there's one in Hayes Valley. But it's, I would say some of the newer restaurants look like they're getting a little bit more Americanized, but their menu actually has some authentic Thai stuff. And, every time I go there, it's good quality food. And so that's my favorite restaurant. And a lot of my other friends actually also agree that it's probably one of the better Thai restaurants in the city.
Nice. Yeah, I've been looking for the best and looking for a new one. It's been pretty tricky up until recently, but and Lao Table is one I would also recommend.
Oh, nice. I'll definitely check that out.
Finally, what do we have to be optimistic about the future?
I'm really optimistic that we'll start seeing some products come out and real usage of, being seen of these products. And I think that's really when things are going to become exciting, is when I get to actually, tell my friends in the mainstream, hey, this is what the concept is, this is what they do, and you can actually try it out right now. There's actually a real consumer product that you can actually test out. And I think that's really exciting. And what makes me confident that that's going to happen is, I talked to some of the most reputable venture capital firms in Silicon Valley, and they mentioned that they have access to a wider network of talent and, companies that they funded, entrepreneurs that they backed, EIRs, et cetera. And they're saying that all of the top minds are all going and focusing on crypto and blockchain right now. And to hear them say that, this is real data coming from their portfolio companies, coming from their talent pool, that gives me a lot of confidence that we're going to have the right talent, the right mind share to be coming up with a lot of the solutions to a lot of these problems that crypto can really solve.
Nice. We've arrived at that point in the show where I give you the platform to plug anything that you like.
I think you covered probably a lot that people would want to hear about the ecosystem. I'd say that it's a revolutionary time right now. It's exciting because anybody has access to participate in this ecosystem, whether it's a user of our product, whether it's investing into any of these innovative technologies. And it's really giving power back to consumers and decreasing power from, all of the existing companies and intermediaries. So, this is a game-changing time, and people should do as much research as possible and just buy a little bit of crypto and just kind of gain a little bit of exposure to it. And it's one of those things where, you don't want to miss out on, because this is a once in a generational opportunity.
Paul, I'd like to thank you so much for joining me on the show today. Pantera has been an incredible success story, and I'm excited to watch it continue. And although it's still early in the year, I think that 2018 is going to be an exciting one as the blockchain and crypto industry continue to evolve and grow and ultimately mature. So again, thank you so much for sharing your story on the VentureForth podcast today.
Awesome. Hey, thank you so much, Joe. Looking forward to doing some more deals together and having a lot more fun in this space.
If you enjoyed today's show, please subscribe to the VentureForth podcast on iTunes, Google Play Music, Stitcher, or SoundCloud. You can also follow at VentureForth Pod on Twitter for our latest updates. As always, I'm your host, Joe Mahabutivani, and thank you for listening to the VentureForth podcast.